Welcome to Coleman Report Live. I'm Bob Coleman. We're talking Main Street and the small business lenders who help it grow. Katie, good to see you. Lance, good to see you. You know how to ask questions, please. We have a couple. We put them up on the SBA PPP answer desk. And lot of gray area, which hopefully we're here to shed a little light on where we can. And Lance, that's your job. Katie, that's your job.
Bob, right before the show, I got off the phone with an unnamed SBA service official talking about servicing the PPP leftover balances, talking about how to get your guarantee paid. And there wasn't a lot revealed, but we did the webinar the other day, and I'm sorry, I'm getting off track, but we did the webinar. We did the webinar the other day, Bob, and we spent a lot of time talking about until SBA issues further guidance, you just have to use the 50-50-7-2 in the unilateral matrix. And it was confirmed that that is absolutely what's going to happen. But it was also confirmed that the additional guidance is coming, and it's coming real quickly.
Good. Additional guidance in terms of how to process the
a couple
PDK.
of things, Bob. You know, we got into a deep discussion about is SBA going to expect us to litigate somebody on a $2,500 PPP loan? And the answer is we're probably going to get some guidance that opens up what we should and shouldn't do. And we're probably not going to have to go after those really small balance.
Yeah, just send them to Treasury and move on. Yeah.
Well, and Treasury is one of the most effective collectors out there. So anyway, I hated to get off track, Bob, but you mentioned it, and 3 seconds before I got on the webinar, I got off a phone call with a friend of mine, and we were talking about it. And, so, I mean, there's right now in the interim, use the 50-50-7-2 in the unilateral matrix, but guidance is coming.
Katie and I love to go through stats. We love to go through these reports. We're going to talk primarily about the OCC and their response to all of this. If you're an institution regulated by them, you absolutely need to know what their thinking is. And if you're not, the OCC is the elephant in the room, and they're going to make sure that other agencies are aware, because you may be under the regulation of a state banking association or the credit unions or a non-bank lender. And non-bank lenders are the CFPB board has you on their radar. But hey, let's start with this one. I want to sort of put this into historical context. Katie, what do we think? Are non-performing loans, have they remained low during this recession compared to the Great Recession? It looks like our terminology now will be the COVID-19 recession versus the Great Recession. And yeah, that's true, Lance. Oh, go ahead, Katie.
Yeah, it looks like our audience is correct on that. We are seeing in this particular recession, whatever we want to call it, local restrictions did have some effect, but not nearly the effect we expected. If you looked at previous recessions, there were things like foreclosures affecting it, interest rates, things like that. In this particular one, it stayed really low. That could, of course, change later on, but currently we're still seeing it stay really low.
But Bob, we didn't throw in the previous recession, we didn't throw almost $1 trillion at the small business community. You know, a big part of the reason non-performing loans have remained relatively low is SBA's made their payments. And in addition to that, we've thrown PPP money out in unbelievable proportions that has also aided them in keeping performing. I think the real proof in the quality of the portfolios is going to happen over the next several months.
Well, and we're going to definitely, this is something that we're going to track over the next couple of years, because I haven't read too much about it, but the way to approach this recession, the last one, we bailed out the large banks, AIG, General Motors, the large corporations. This time we're doing Main Street, and it'll be interesting. And the raw data is going to support which approach was better. Obviously, everyone on this call, we're rooting for Main Street, and we think that's helped quite a bit. But there are two completely different approaches, and we'll see which one worked the best.
And Bob, I agree. I think this approach is absolutely the best approach. You know, I agree with how we went after this, but I do think we're going to see non-performing
Well, of course we are.
loans trickle up over the next several months. But I think if we had not thrown PPP and 11, 12 payments into the mix, we might have seen astronomical past due.
Oh, and very high unemployment, and we certainly would not be where we are in the recovery. One thing about this recovery, the supply has always pretty well remained, demand has remained there. The demand by the consumer was not there during the Great Recession because of the uncertainty of what was happening. People were losing their jobs right. You have unemployment, but if that's been mitigated by unemployment insurance, and there's a lot of people wanting to hire you if you want an entry-level job.
Well, Bob, you've made this comment a few times during the last year about some of the differences in how this has performed versus the previous recession. Spending the money on Main Street has kept people in a better position than throwing $100 billion at General Motors.
Yeah. Well, Katie, the good news is when the next recession hits, you can be the old grizzled veteran going, I remember back in the day.
Yeah, I was pretty young for the 08 recession, so I hardly really remember that one. I know there was one talk, but I was too young to really understand it. So this one's definitely going to be a first for me.
Yeah, it didn't affect you that much. Weddings were canceled. And
Well, Katie, you'll get to experience it again. Bob and I have been around about every 10 years. Bob and I have been through a few. And so, Katie, in about 2030, I promise you, I'm going to be retired by then.
That's right. And you'll be the expert going, now, wait a minute. Everyone needs to remember. Hey, question number 2. Specifically, the OCC identified the following industries as the highest risk for lenders due to the risk of foreclosure. Restaurants, gyms, entertainment, all of the above.
I know what I'd vote for, Bob.
What's your vote? Go ahead, Lance.
All of the above.
Yeah, well, I think we had to give an easy one on a Friday. The good news is everyone is right. Restaurants was specifically cited. Gyms were cited. Entertainment definitely cited. And all of the above. So they're...
the category that's not on there, Bob, that kind of blows my mind, they don't have hotels.
I know, and thank you for that. Katie, I didn't see them address hotels in the report, did you?
Yeah, no, they didn't really address it in this portion of the report. I don't know if they actually addressed it at all, to be honest. I saw they did address things like real estate, retail, oil and gas, equipment, manufacturing. Those things were also listed as higher risk or things that they're watching. But I did not see a hotel, so maybe that's one they're still kind of watching. The report did mostly come out with data from December and slightly earlier, so they might still be evaluating how that's affecting it, given that it's not the big traveling season yet. They might still have to evaluate.
And I think, Lance, what the report's take was, which I thought was interesting, is they're concerned, this brings us to our next poll question, about what's happening to downtown America and are people coming back, and are they able to support the restaurants and the gyms and these downtown areas? Let's take a look. They are projecting in 2022 that office vacancies will be at what number? The answer is they got it right, Katie, 12%.
Yeah, it's right around 12% for this one. They kind of expect it to go kind of up a little bit in 2021 and then maybe come a little bit down back to 12%. Not too much of an arc there, but they do expect it to go up a little right now and then back down slightly. Part of this is just looking at how many businesses in general are doing work from home and things like that. It's really going to affect office use and things like that. And we're still kind of unclear as to how that's going to pan out. A lot of businesses haven't made a plan yet with what they're going to do with going back to the office, if they're using the full office or just portions of it. It's still pretty unclear.
Yeah, Katie, we ran that poll this week, and what was the number? 38% said they don't have a clue yet on what's happening. Was that my...
Yeah, right around there.
Same question, has to do with industrial. They did note that we are changing our economy from a local shopkeeper Main Street to huge logistical centers, huge warehouse, huge demand. And they nailed it, Katie.
Yeah, they might be slightly elevated. We were around closer to 6%, but yes, it seems like everyone was at least fairly close to the answer there.
Bring up this chart. Now, I apologize if you can't read it, but the line for the top, and what I like about this chart is it compares where we were to the Great Recession. So office vacancies are comparable to where we were when things peaked in 2010. And as you can see, it peaked 2021 and it's gone down a little bit. And you can see all these numbers are going down from after the recession. Industrial peaked at about 10% and went way down to 5%, and it bumped a little bit, but industrial strong. And retail, actually, those numbers are surprising to me.
It went up and it's kind of flattening out there.
Yeah, I thought they'd be higher. But Lance, I think if you're a credit manager and you're looking at portfolio mix and writing credit boxes, you're going to, this says if I'm doing an industrial warehouse, I'm okay, but maybe that office space I'm going to take a little bit closer look at.
Well, I think the one that kind of stands out for me, Bob, is looking at apartments too. Apartments are at a very comparable level to 2010. But retail space looks amazingly good.
Yeah, which is surprising. But again, that just in my little corner of the world, that makes sense. I saw a lot of store closures, but now I see grand openings. Hair salon, barbershops are out of business, replaced by nail salons, and so you see that happening. Restaurants were closed, but they're coming back with a new concept. So that's what the OCC is saying. That's what we're having. So I think this is important. I think this is important when we're talking about looking forward from a 30,000-foot level. When we're talking about equity injections, remember SBA says we go 10%. Maybe we don't do that on some of these projects, but not all. I guess the takeaway, Lance, is not all commercial real estate is the same.
It definitely is not. I mean, it's just like we talk about, and we're going to have a great webinar next week about the restaurant industry. Not all restaurants are the same.
Oh, absolutely.
There's some that have thrived.
Yeah, we have 6 or 7 categories, and some are doing very well, and others are not doing as well. Katie, what was the overall takeaway, the overall summary of this report? Oh, by the way, it's if you want to Google it, it just came out, and it's office. Well, we have it attached, don't we, Joseph? Yeah, we have it attached. So
yeah, I believe it is attached. So yeah, they were kind of looking at in general how everybody's doing after the pandemic. This is primarily, like I said, data from December and earlier, so it is a little bit more dated, but they did throw in some newer stats when they could. Especially in terms of how things like the vaccine is affecting businesses being able to reopen and things like that. And some of their projections are based on the vaccine now being available and things like that. So key takeaways, banks maintained sound capital and liquidity levels in 2020, and bank profitability remains slightly stressed due to low interest rates and low demand. Something else they were looking at was increased business and consumer confidence due to, again, those vaccinations, and higher employment levels are improving the economic prospects for 2021 and 2022. So just some other themes, though. Oh, sorry. Do you want to add in there something?
You're fine. Go ahead and finish your thought. interrupting.
Credit risk, they were looking at credit risk, operational risk, compliance risk, saying credit risk is elevated and evolving as the economic downturn continues to affect borrowers' ability to service debts. That's going to be slightly different in SBA, though, given where they had those 11-12 payments and things like that. That's going to affect it slightly there. Operational risk.
I'm sorry, Katie. Joseph, that's a slide one. That's we're all on the same page. Go ahead, Katie.
Oh, yeah.
There you go.
Operational risk is also elevated due to the complex operating environment and things like increasing cybersecurity threats. So that's something that they're saying that you're going to need to focus on, make sure cybersecurity is continuously up to date. They're also saying compliance risk is elevated at banks as the banks expedited efforts to implement assistance programs, caused them to rush a little bit. Really, they're saying risk and compliance risk are all slightly elevated right now. Maybe a little less than originally expected. As we go further on in the pandemic, they have started to put some more things in place to really make sure this isn't affecting banking as much, but it is still a concern that they are concerned with and they want to continue to evaluate.
Lance, that's why both of these SBA programs are so important for SBA lenders. Here, the guarantee 90% is going to give you very nice fee income on secondary market sales. And the same with 504. We can refinance if we can get that done, and we can refinance these deals. So that's important sources of A, income to the bank, but B, satisfy borrowers
Absolutely.
Their financial solution, Lance.
Well, one of the things, Bob and Katie, that I was remembering Bob's been talking about earlier in the year. One of the things that's happened during this pandemic that did not happen in the previous recession is banks are still lending money. That's one of the huge differences too. And so banks have not stopped lending money. SBA has given us the tools to make SBA loans. In fact, they've given us better tools. So,
right.
I really think this recession is going to go down as one that was handled in a better way. I'm not going to say the best way because there's all sorts of
yeah, that's unfair. No, but I agree with you. I think the approach was right. There's always going to be fallout, especially when we're talking $3 trillion. That's an issue. Let's see. OCC. How concerned are we about the housing market, according to the OCC? How'd they do, Katie?
Yeah, so the OCC is slightly concerned about housing market. Of course, that's looking at the 08 recession. It is a totally different situation now.
Katie, you're being kind. They're not concerned at all.
Yeah.
You're being too kind. Go ahead, Katie.
Oh no, that's pretty much it. You are seeing different underwriting this round and things like that. So it is going to affect 2020, 2021. Yeah.
Go ahead, Lance.
Well, one of the things about the housing market right now is the cost to build a house has gone up so much in the last 18 months. I don't have a concern about the housing market right now because even in a very small state like this, Bob, people are having to make offers above the asking price in some Arkansas markets. I know it's true in Texas. I know it's true in California. But my concern, Bob, is 4 or 5 years from now when lumber prices and shingle prices settle back down, buying a house today, will there be declining values?
Well, it's just if they increase interest rates, how does that impact? And from an editorial perspective, we try not to cover things that are covered by Wall Street Journal, whatever. We assume you read that. But I do have to point out there was a fascinating article today on the housing situation, the story of a couple in Pennsylvania trying to buy a house. They're 0 for 15 in terms of making offers above, and they can't do it. So OCC said that the demand is there, the supply is limited, interest rates are low, and the economy, the consumers are looking for the economy. So they're not OCC. And they specifically cited better underwriting by the institutions. So they're saying we learned from 2010. Let's see, geography, they mentioned very quickly, they just said it varies by geography, which is code for know your footprint, right, Katie?
Yes.
Absolutely. And especially looking at the pandemic, what they're saying is some places are open more than others. Some have a much stronger plan for reopening. So that is something you're going to have to look at when doing your underwriting and things like that.
Let's conclude with that chart, Joseph, on the concerns. And these are the concerns, a nice chart summarizing what the OIG is concerned. Katie, tell us what we have.
Absolutely. So we've got operational credit compliance. Most of this we've already discussed a little bit, but this is their percentage on things they're going to continue to really look at and continue to evaluate for the next year or two, especially. And these are just the things that they're most strongest concerned about.
Lance, if you'd asked me, I would have flipped those. I'm surprised operation issues are 40%, credit's only 1 in 4. I'm sort of, I would have got that one.
I would have missed out on that one as well, Bob. But I do agree with the ones at the bottom of the list. I mean, interest rate risk, interest rates have stayed relatively low for a long period of time. Liquidity of financial institutions is excellent. So, but I would have flipped credit and operational risk too, Bob.
Jody, you have a great question. I'm going to hold it over till Monday. Barry says, Katie, do we know how much remains for PPP? Will 531 come before it runs out? I think we all agree.
Yeah, the SBA usually updates us on Sunday, sometimes Monday, so we'll probably not get an update until next week. Last I heard it was $5 billion, but that may have changed significantly since the last update.
Very good. Hey, both of you, great discussion. I enjoyed talking about this, putting things into context. Please take advantage of the restaurant webinar we're doing. That's a fun project that Lance and I are working on. Katie's working on it also. She doesn't know it yet, but she...
No, I know it. I'm just started on it.
Everyone have a nice weekend. Thank you for joining us for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Have a great weekend.